Hello, good morning, good afternoon, good evening, depending on where you are joining from. I am Gauri Das and I am your host for this chat show named Factoring One Stop Solution for Your Global Aspirations. In this chat show, we bring eminent speakers to talk about various facets of trade finance, working capital solutions, and much more. Likewise, we have two eminent speakers today, and they are going to talk about technology, working capital solutions, and lot many other things. So be ready, and we will be starting and we will be inviting them very, very soon. But before that, let's acknowledge the festive vibe that we have all around. Ramadan is already on, Easter is around the corner, and between today and tomorrow, of India or more than half of India is going to celebrate one or the other festival. It can be Harvest Festival, Mahavir Jayanti, and lot many other festivals. On behalf of India Factoring, I wish everyone abundance of 3H, which is health, happiness, and harmony. Let there be peace, let there be prosperity. On this note, let's start the session and let me quickly take you through India Factoring. India Factoring is a financial services provider and we offer working capital solutions through the factoring product aimed at converting your receivable into cash. The company is subsidiary of a European bank, FimBank PLC Malta, and is registered with RBI as an NBFC factor. India Factoring is also AB3 category authorized dealer. Through our global network, we offer one-stop solution around receivable finance. We have been consistently maintaining numero uno position in India in export factoring since last 4 years. And we take pride in supporting businesses with working capital solutions and in turn support global trade and nation building. Now it's time to invite our first speaker. And as the COVID restrictions started waning and world started opening up, we decided to move forward beyond the boundary of the country and have someone from abroad. Yes, our first speaker is joining from London today, and he is Mr. Satish Sani. Satish is head of business processes services for Hexaware in UK and Europe, and he's based in London, as I mentioned. With 18 plus years of experience working with global banking, financial services, insurance, and healthcare organizations to transform operations by leveraging technology. Satish is a technology enthusiast and design thinking practitioner. Trade finance is very close to Satish and he is actively involved with tech solutions rapidly transforming trade finance operations for bank and corporates. Satish is regularly speaking on topics related to transforming operations with help of robotic process, artificial intelligence, machine learning, low code, no code technology, customer experience transformation, and way beyond. He represents Hexaware, best known for creating smiles through great people and technology. Hexaware is a global IT services company empowering businesses worldwide to realize digital transformation at scale and speed. Focused on automate everything, cloudify everything, and transforming customer experiences. Please welcome Satish Sani.
Thank
Hi,
you.
Satish.
Thank you, Gauri. Thank you for inviting me. I think this is a great forum to talk about role of enabling technologies and solution as you're working with a large corporate base, customer base, and banking partners across the globe. So looking forward to this session. Yeah.
Thank you. It's time to invite our next speaker today, Mr. Ravi Valecha. Ravi is an experienced banking and financial services professional with expertise in factoring and supply chain finance. And he's currently CEO of India Factoring and Finance Solutions. Please welcome Ravi Valecha. Hi Ravi, thanks for joining. Which festival are you celebrating today?
All the festivals. Thanks for the session. Looking forward to discussion on factoring and how we can do those things. Festivals across India, and I being an Indian, I'm celebrating all the festivals today.
All the festivals, yes. Thank you.
Good
So
morning,
Satish,
Ravi.
as
Morning, Satish.
Satish, as we were discussing before the session, and also I shared with our viewers today, it's all things technology for you. But not everyone is like that, and people think it's difficult to understand technology or implement it, or there are risks involved. What if computer makes a mistake? What will happen? I have so much confidence in what I do manually. Why should I go for technology? So, what is your view? Why are you so enthusiastic about technology? What risks do you see in trade finance if people go manual?
I think technology has this great potential to improve. When it comes to trade finance specifically here, right? It can solve a lot of things broadly, but when it comes to trade finance, it can improve documentation, testing, risk governance models, meeting regulatory risk-based demands, improve anti-money laundering policies, and tighten up control procedures. Right. I think that itself is it's an important thing when it comes to trade, because as we know, trade is a very very complex area. With I think 10 to 20 parties kind of working together to make a trade happen, it becomes very very difficult for banks and corporates to keep a track of documentation, keep a track of requirements when it comes to a letter of credit. And I'm sure everyone kind of joining in knows how trade transaction happens, and when it comes to MT 700, what kind of rules, what kind of documentation and free flowing requirements come into those documents, right? So when it comes to risk, there are, I think, many many risks when it comes to trade operations. I think one of the things is letting go a transaction which is a money laundering transaction, right? And that can quickly happen because the volume of transaction which happens in the trade business is so high, and the documentation involved are so high that matching each and every lever or each and every variable within these documents become a very difficult task for makers, checkers, and then authorities kind of approve the documents, right? So I think if I kind of summarize the potential risk and challenges for the manual trade finance operation, I think one is there is a high turnaround time when you do manual work, and I have seen personally when visited many many large global banks that people kind of use paper on the desk, right? They kind of spread the papers, look at letter of credit on one side, supporting documents on the other side, and then keep checking through pen and paper. And once that is done by maker and checker, then someone kind of enters into the into the core systems, right? And this is a recipe for disaster, right? Because you make so many errors between the manual checks. So so that turnaround time increases because you're doing paper-based work. Sometimes it can take 60 minutes to 90 minutes doing a transaction. Sometimes this can take like 4 hours, a complex transaction. Yeah. Then of course the cost of handling this is also very very high. Because you have people who have kind of kind of groomed over last 5 years, 7 years to understand trade documents, take decisions on different rules as per the international laws. And if you kind of lose talent, and today's market is like you're losing talent much faster than we imagined. So when you lose such talent, you lose that knowledge, and then your transactions are really handled by someone who's kind of coming in new, trying to learn, and cost of error, right? Then of course there is also a problem when it comes to standardization of the process, right? And yeah. So and of course regulatory risk is always there. We keep hearing what banks and corporate pays in penalty when it comes to trade finance operations, and errors made in a trade finance transaction.
Thank you, Satish, for sharing this. So, what I understand is AML risk, regulators risk, the need for speed, and also the change in technology every single day. And for sure, customer is also asking for quick delivery. So, for all that, technology is very, very important. And you highlighted, rightly highlighted the compliance piece of it, that even there, technology can play a very important role. So, thank you for sharing. Ravi, I'm coming to you now, and what Satish said reminded me about one of the conversations that we had in a fair that we recently attended, and one of the senior official of that association mentioned that for small businesses it is very difficult to go compliance way and follow all the compliances, but if they don't do it, then they are in a loss, because when they go for insurance or when they go for any other thing, they are not paid because processes were not followed. There was something which was missing, which should have been done in proper ways, and it did not happen. So what would be your advice to small businesses, because they need to bring in a balance into the cost of compliance that we will be and cost of technology. We will be asking Satish again about the cost factor as well, because it's very important for businesses. But then having this balance of cost, compliance, efficiency, and everything else that is required for a business.
Yeah, thanks, Gauri, for that question. Very relevant. Before that, I think I'll just touch upon what Satish mentioned on the speed part of it and the other compliances and every operational risk element also. So, a few years back, maybe a decade back, I was visiting a European bank, one of our partners, and they narrated, they shared at that point of time that, if all the documents are okay, once the transaction for the customer submits all the documents for the transactions, their tap is just 5 days. And I was shocked. That was 10 years back or so. And I was shocked that this is what we are living in. It was maybe 2012 or so, but indeed, it was not too back that we are talking about a 5-day tap. Come to 2022, the customer's expectation is, I have given you documents. When are you funding me? It should have been funded yesterday. So that's the need of the hour. Now, why speed? Obviously, we need to understand why the element of speed is there, because each minute, what we're talking about is not only SME customers, even a mid corporate, even large corporates. Everybody's sensitive towards the time today. It's not just from a service element point of view; it's also money. It trickle downs ultimately to the numerics. Money received now can be utilized in next few minutes. So that's why the largest of the companies and many mid corporates nowadays have very active treasury, right? To manage the fund flow and how to make money work for you. So that's an essential element. Now, coming to the other question, which you rightly also mentioned, the essence of having everything in order. Now, obviously, the trade is such a document intensive process that all the document submission, accumulation, shipping bills, and whatnot is required. It becomes a possibly a maybe 20, 30 pages docket when the customer is submitting an export bill along with for funding part of it. Now, obviously, the customer needs to be sensitive. We have had instances where customer says that he has been dealing with the buyer for now years altogether without any issue. So obviously, while everything is fine, there is no such element of surprise which comes in. But believe me, there are instances when we have come across situations where even though the customer has been dealing for years altogether, when it comes to the crux, when it comes to the issue at any point of time, like we saw in the pandemic situation now also, there, everybody goes into the words, okay, what is being made into the contract, what is the ifs and buts and whatnot and all those things. And that's why it is extremely important to be very, very clear when we are, everything is done in good faith, but, when push comes to the shove, all these ifs and buts comes into the play. And that's why it is extremely important to be treading on the right path, on the legalities and all those aspects, the documentation. So we need to have the right balance, definitely. Speed is important, but as they say, speed thrills, but it kills also. So it is important, but having a documentation on right ways is also extremely important, especially in the trade finance world.
Yeah, thanks, Ravi. So, what Ravi says, make your money work for you, but don't go for very, very high speed without a balance, because speed thrills, but it kills as well. Here's a question for Satish, and it's from Vinod. Vinod wants to know how the technology is helping integrating systems of parties to trade transactions to avoid any risk of fraud and secure transactions.
Thanks, Gauri, and thanks, Manoj, for the question. I think as we look at technologies evolving in the trade side of the world, and let me tell you that there's a lot of things happening right now, and I have not seen in the last 5 years, what I've seen in the last 3 years, right? So there are multiple parties now kind of working on the trade side of the world. There are fintechs who are kind of getting very attracted towards this, section of the world, because they realize that this is an untapped opportunity because of the sheer involvement of documentation. And what we have seen is now is there are different forums which are now created, where or technologies which are also created, where there are different parties who can interact on one single platform, including importers, exporters, insurance companies, banks, um, insurance companies, shipping companies, and many other organizations which kind of take participation, right? What we are also seeing is, because this just started about 3 years back, and there is a lot to be done. There's a lot of database which needs to be built underlying. There are more participants who needs to participate on these networks to make this like a global platform, right? What happened to payments, right? If you remember what happens to payments, about 20 years back, I remember I used to go with my mother to kind of deposit money, or take money, and I used to kind of stand in line, and then fill the form, get to the teller, and then we used to get cash, right, or submit the cash, right, and then you do the passbook entries and all that. Same is the case with trade finance right now, right? Right now, payments, you do it and you don't even realize that the payment is just gone any part of the time in the day, right? Similar efforts are currently made in trade. What I have seen now practically happening, while there is a lot of conversation around blockchain, which kind of integrates a lot of parties together, but because this is so complex, because you're dealing with someone in India, then you're dealing with someone in Colombia, then you're dealing with someone in China. Bringing everyone on blockchain will be a long, drawn process, right? It's going to take time. But what I've seen is that once you have the documentation with you, right? You can then automate those processes, because now technology exists where you can read these documents much faster through OCR, optical character recognition technology, which is more cognitive now. And what I've seen is a much higher percentage of data retrieval from the documentation of different types, right? Once you get that, and you have details of each variable, you can then match with your LC or your open trade document requirements, and process, right? So in terms of integration of different parties, I still see very difficult when it comes to happening with insurance and others. There are efforts which are made. We still need to see results. But what I see here is that, at least on the fraud part, there are engines and technology which are now connected to see, where is your vessel going? Are they going into territories which are not part of your transaction? Is the ship kind of valid, or they are kind of from a restricted sanction countries? All of that you can track very easily now, and with help of APIs, you can connect it to your technology, and in real time you can actually tell. I've seen tools. We use tools where when a transaction happens, say if it is a 45 days travel time for a container, we can actually see if the container is right now in the right country, or it's in the sanction country, or so and so, and track if there is a money laundering trigger. So I think on fraud side, there's a lot of things which are done. There's fantastic solutions available now in the market. And if given opportunity to your tech functions, you can actually integrate this much faster than you think, actually.
Thanks, Satish, and thanks, Vinod, for asking this question. I hope you have understood what are the options available now to avoid fraud and secure your transaction. Satish, you actually made me nostalgic. Those banking days when you had to go there, and it was a dreaded experience.
Yeah.
There have been times when I would be in a bank for close to full day, and there will be no technology. The systems will be out. Again, you have to come back, and whole day would go just for a small transaction. But today, like sometimes I wonder what would have happened if there was no technology and there were lockdowns. How would have businesses and in our personal lives also, how we would have managed. So yes, it has accelerated the transformation of technology by a very large extent because of this pandemic. That has been one silver lining here. Yes, so Ravi,
Absolutely.
coming back from you, uh, you were saying something, Satish?
Yeah, absolutely, Gauri. In fact, the change that I see last year in pandemic, right, because of technology, right, I
Yes.
realized that banks are more collaborative now with their peers, right, when it comes to trade processing, right? Because if you remember in 2021, when things started, or 2020 actually, when the COVID started, and there were a lot of ships kind of waiting on the ports, containers were not taken out. Banks were struggling to kind of do transaction. They were like global banks. They have no presence in certain ports because the documents used to travel to their own branches. and they face this big problem. What I have seen, happening in that area is that banks started collaborating. So there's a global bank talking to another global bank and saying, "Hey, you have a branch operation, then it's working for you. Can you help me process my transactions?" Right? And I have seen that for the first time, right, happening, between banks, and they're kind of collaborating. Again, all thanks to technology, which is kind of enabling this.
Yes, absolutely. Yeah, so coming back to you, Ravi, you mentioned about this instance in a European counterpart, and we know that factoring is much more evolved in those countries. It's not as yet in India, but mostly it is seen that factoring is very well suited for small and medium-sized businesses. But now we are seeing, at least in India, that even large corporates and mid-sized corporates are also coming forward and utilizing this product. What's the magic? What is the benefit that they are seeing in this product, and why are they attracted to factoring?
No, so obviously, for that we need to know a little history why in India factoring has not taken up in a manner which Satish can share. In UK, it's bread and butter product for most of the corporates. Unlike in India, where banking is the means, which is a traditional means of banking, in most of the developed economies, factoring is a go-to product when it comes to the working capital. It's a better way, an efficient way of using your receivables, unlike a creating of an hypothecation in case of a banking world, where you're creating loans and loans on your balance sheet, retaining the debts on your book, and continuing in the manner which has been there possibly for 75 odd years in India. Since past few years, we are seeing that change. It should have been earlier, but better late than never. So we are seeing a change that the corporates and SMEs, including, they are realizing the importance of factoring, and a product like in factoring, which gives you an off-balance sheet mechanism also. So it helps you to scale up. It helps you to work on the turnover basis rather than completely being besieged by the historical balance sheet, which has been there with the customer, borrower, or whoever that be. Banks end up looking at the collateral as a primary requirement for when they're extending a working capital facility. uh, they just not look at other means. Maybe the collateral may not be hard collateral, soft collateral, or whatever that may be. But this is the premise of the banking world in India. Uh, Fortunately, with the factoring mechanism, you have unsecured finance, you have off balance sheet, which is not provided, even if some bank may end up providing a unsecured, but an off balance sheet is something which is provided only on a factoring mechanism. And that's what we are seeing the emergence now, that people are realizing that importance of selling off the receivables and deleveraging from their balance sheet, which improves their ratios, improves their balance sheet, and helps them, tidy up their working capital in a much better manner. We end up providing collection services. In case of export factoring, we have seen during the pandemic the need for securing your buyer's risk, right? The biggest of the buyers went through situations which could have affected them in a negative manner, and it was test of times actually for customers. Now they realize that the importance of factoring when you are getting a cover from the overseas buyer, or a credit in overseas bank, or an insurance company. And that's where now people are realizing. So that's the magic in essence. What is working out is the need of the hour, and adaptability is something which is required also. And that's where the corporates are realizing and adapting to the new norm, which is going to be the modern ways of working. And same thing has been happening across industry. It's not just factoring, but we are seeing in payments industry, in other industries also. It's adaptation to the new world. The UPI was not there for maybe a few years back, and people were using, as you rightly mentioned, standing in the banking queue was a long thing. So it's all adaptability as well, and so is the case with the corporates also. So it's better late than never. We are seeing the emergence, and with the platforms also being there in India now, the exchanges also being there, and other means. We are seeing the emergence, and the development is expected to take India definitely to the new age world. And on the exports fronts, we are seeing that India recently touched upon $400 billion on merchandise exports, plus the services exports. If we do around about 200 or 250 billion dollars, that's around $650 billion all put together. So that's a huge market to cater towards on the export front as well. And people are realizing the importance of securing your transactions, covering your risk, buyer's risk also. and besides deleveraging and other parts. So that's where it is. The interest is there across segments, right from an SME to a large corporates. It's only the number of players and the market which will define the requirements and the capabilities of us. Of course, that defines that we are the number one factors in India and are able to service across the sectors, across the segments. Proves that the need of the hours is to grow more factoring product.
Thanks,
Thanks.
Ravi, and rightly said. And it reminds me of the term that has been coined to explain how this world is today, which is called as Bani, which shows that brittle, like you rightly mentioned, many businesses failed. So it's brittle. We do not know how businesses will behave in a difficult situation. People were anxious, businesses had this anxiety, and everywhere the discussion was what is going to happen, we do not know. Non-linear, which is we do not know the cause and effect relationship. We did not do anything directly to invite COVID, and likewise we are talking about greenhouse effect and all of it, and we are not doing anything directly to do these things, but there is a non-linear impact and it is impacting businesses and lives. And finally, incomprehensible, nobody has all the answers today. We do not know how is the fourth wave going to come, when is it going to come, what impact will it bring, and how we need to be. So the only answer, as you rightly said, is being adaptable, have the security, and that's where the businesses are getting attracted to factoring. Thanks for sharing, Ravi. And Satish, this question is for you. You have mentioned, like in your introduction, I mentioned that you are digitizing everything, you are cloudifying everything, but what is the cost associated with it? How is the technology and the business impact of cost is to be balanced by the businesses? Is it a
Sure.
bomb that businesses have to face, that the cost would be very very high, or it is manageable and there are long term positive effects of it? Over to you, Sati.
Thanks, Gauri. I think it's a very, very good question, because I think that is the first question which kind of comes to every business leader when it comes to, hey, should I adopt? Should I kind of go after blockchain? Should I go after something in my technology or something very simpler, right? I think I'll say that the way to look at it is in two ways, right? One is if you're a bank and a financial services firm, factoring or bill discounting or doing LC processing, you need to look at what is the risk associated with these transactions, because any large bank will be spending close to 25 million to 45 million dollars a year just maintaining compliance and regulatory requirements and risk associated with regulatory compliance. So I have seen there's a lot of appetite to test and try in a banking scenario, because they understand it's like this is the spend just on the risk. But just imagine there is an event and then you're paying like $100 million or $400 million in penalties, right? So they have more acceptance, and I've seen they are trying a lot of technologies. They're part of consortiums, building between different banks. But for a corporate, right? For a corporate, I have seen that corporate never thought that there is a way that we can use technology to process trade finance, right? Now, when it comes to corporate, I will say what I've seen is a very, very common challenge with the corporate is that you submit a document and then you realize there is a discrepancy, and the transaction goes into loop, right? That discrepancy can cause you like 2 days delay, 5 days delay, sometimes more, right? And of course, there's penalty associated with discrepancy, so it's not free. So if you see that kind of engagement, and just imagine if you're a large corporate multinational company doing this across the globe, you're doing like hundreds of transactions every day, small, big, all kind of transaction going through this chain. And for them, it's very important that they get something very sleek, very, 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 very easy to implement, works with their existing ERPs, because they're not banks, right? They already have ERPs to do invoicing. They have companies to do with bill of lading, right? What I have seen now is that there are organizations which works with banks and factoring organizations, and basically these banks then route these technologies to their top 20 percent of the customers, who kind of driving 80%, 70% of the volumes. And what they're trying to do is they're basically killing the data issues at source. So that means when the corporate is basically creating these documentation, they're doing it on these platforms. And that means when bank receives these documentation, they're already in soft copies, and they're easy to kind of read. Data is available. They just have to kind of put it in the engine and take decisions on to go, not to go on a transaction, or advise a customer that, hey, there's a potential discrepancy here. In fact, that even happens at a corporate level. So in the traditional operating model, a corporate brings the paper, give it to the bank, and the bank start processing, right? In the 2B model, what you will see is this technology implemented at source. So corporates are using this technology. The data input which is coming to bank is already screened, very good in terms of discrepancies. They have checked it all, and that means if you hit the bank with those documentation, you go fast, right? And that means a lot of benefit when it comes to eliminating errors, duplication of documentation. You're avoiding a lot of KYC issues when it comes to your suppliers if you're an importer, right? So it will not cost a bomb. That's what I will say. And today, as we speak, there are providers and there are technology platforms, and we do this for our customers, is do variabilized operations, right? That means you don't have to pay for technology, you pay for transaction, so pay as you go. So that means if you're transacting like 100 documents a day, you pay for 100 documents. You're not worried about what technology, where it is sitting and XYZ. As a corporate, you're pushing that to the platform, paying per document or per transaction, and that's it. Your transaction is done. Unlike you're spending like millions of dollars building up a technology and then doing transactions. So that's where I will kind of say how it costs, right? Because depending what corporate you are, you can work in a utility model and leverage a technology which is available as utility, right? And then a dedicated technology on your side, right? So with different sizes, you can actually look at risk, you can look at processing, you can look at penalties, and then you look at tools available in the market which can help you solve all of that. Yeah.
Thanks, Satish. And yes, it makes sense because it's now pay as you go. And it's not that you have to build that technology. I mean, you have to
Yeah.
pay for building the technology. And at the same time, you need to evaluate other factors also, how they are impacting your business, how the compliances are impacting, or how it is even impacting the customer service. Even that is extremely critical point to be taken care of. So if you go technology way, it is going to be helpful for you if you put together everything. Thanks for sharing.
Absolutely.
And here's another.
Sorry, just one point there, right? Because when there are exporters and importers on both the sides, right? Remember, if you're doing like 10 containers a day, which each container costs you like a 15,000 pounds. Remember, there's a lot of money which is behind the scene, right? Which is working. So there is credit which is provided by the manufacturer to you as a trader. Then there is a manufacturers taking credit from the raw material providers, right? All of this is a cycle. So if you process this in a model where you have all these documents ready very in advance, that you're avoiding any errors or delays because of error or non-availability of certain documentation or terms in your documentation. It solves a lot of problem for you, right? And the benefits, you can go down the stream and see where your fundings are coming from and how are you utilizing your credits and working capital. Yeah.
Yeah, so yes, Satish, solving all your problems technology way. And I'm going to next question now. This question, I would request both of you to take up. One, please share your views on trade tech developments in India, especially DLT, including digital trade assets and its scope, and how it helps factoring in India to boom. He's thanking it's Arjun Balu. Thank you, Arjun, for asking this question. And we would start with Ravi here.
No, so yes, definitely, this is the right question, and as Satish also mentioned, highlight something on the development on the technology side. So my simple thing is that word on that digital capabilities is that it's not something good to have technology today in today's world. It's a must to have. So that's the difference. So it's all about survivability also. It's all about adaptation again. It's something similar. I come to that because it's no longer something that you have an option that you do not have a technology. So it's a must to have. Or it's all about survival. And to the question which is specific to the DLTs and other scopes on the trade side, so there is an emergence of all these DLTs and blockchain and all those techs which is coming in from the on the trade side also, and it is extremely important for securing this transaction. We have seen during the pandemic also there was one big instance of a fraud which happened in oils related sector in possibly something around about $1 billion plus, which was the impact in Singapore during the pandemic times. So this is an extremely important initiatives to secure the transactions on one aspect that these elements. But however, when we are talking about bringing out some fraud mitigants in place, we're talking about bringing all the banks, technology players, and Swift and various other players who are interfaces into one ecosystem. That has been a challenge, as Satish initially mentioned. That is a big challenge across the world. Swift is the global thing, which is there, prevalent, all prevalent, and that makes transactions have processing easier, much simpler. But there is not something similar, which is a risk mitigant to that extent till today. In bits and pieces, it's there, in a sandbox sort of an environment. It has been created. Somebody announces, a big bank announces that we have done some transaction on a secured mechanism using blockchain and whatnot in a sandbox environment, probably a transaction where all three stakeholders, that is the bank, issuing bank or correspondent bank, and the customer and the buyer possibly, are onto one secured environment. That has been there. However, that needs to be now scaled up. We are seeing that emergence in the Asia Pacific, or some 2 or 3 countries doing those transactions. But there needs to be a more collaborative initiative. In India, also, we ourselves are using some blockchain initiatives where the documents, the transaction details actually get picked up through the GST portal that is on the domestic front. So that is a secured mechanism, secured financing mechanism. It helps in deduping. It helps in verifying the authenticity of the transaction in India itself. For we are using that as well. On the export front, also there is something, or an international trade front, also there is something more which is expected to be launched soon. There are various players like Bolero, Monetago, and various others who are coming up with these solutions. And I'm expecting that 2022 will define the future for these technologies, the blockchains and the DLTs of the world. More important will be the consolidation of the ecosystem across the world, so that there is the element of fraud is mitigated on the global level, because today's customer sitting out of Dubai can get a funding in Singapore or any part of the world. So we need to have that uniform ecosystem which prevents all these issues, and that's some time away still. That's what my feeling. Satish.
Thanks, Ravi. Satish?
Thanks, Ravi. I think I completely agree what you said, Ravi. To for a DLT to be really successful, it's very important that all parties kind of come on, because the very premise of digital ledger or a blockchain is that every transaction is tracked to the source, right? And you have information which is available freely, and you cannot edit it, right? Once you've kind of created it. You can of course do amendments, but you cannot really change the original document. So as you rightly said, the challenge right now that we see is that involvement of different parties coming together and executing a trade on a blockchain platform, right? So because there's so many parties, right? I think we are already there halfway, but to really have a true digital blockchain transaction, we need to get all the parties on the platform, and it's a combination of government, corporates, banks, everyone, regulators needs to kind of come onto one platform and say, hey, this is how we will allow the trade to happen, right? And so I want all the bodies to be kind of working in this particular framework, right? But yeah, technology already exists, right? That's a good part. Technology already exists, it is already in practice. We just need to bring to scale, right? And that's what it is needed now, right?
Thanks, Satish. And yes, so for both of them, Arjun, the key is collaboration, the connect between the various platforms. And even in daily life, we see we have to move from one UPI to another to our net banking. It is my one of my wish lists that there should be just one way to pay everywhere that you want to pay, and irrespective of whatever amount you want to pay, there should be just one mechanism. So everything comes together, they all collaborate together, and it happens. And likewise in trade finance also, this is what they are looking forward to. So Arjun, thank you for joining and asking this question. And yes, factoring in India is for a boom. Thank you. Here's another question from Vinod. He wants to ask you, Satish, the instance of hacking and data being compromised pose huge challenge to online banking transactions. What efforts are being made in banking technology to mitigate or eliminate this threat to increase confidence of trading community in online transaction banking? Over to you, Satish.
Thank you, Vinod, again, and thank you, Gauri. Very important question again. So let me tell you that banks are spending like billions of dollars, across different countries on just this particular part, right? Because and in the light of what is happening now, in Europe, between Ukraine and Russia, you'll see more and more attacks, on banks, financial services firms, right? So they're spending a lot of money on that, right? In fact, what I've seen is just to make things secure, and there is a lot of regimes which are coming in, right, related to Swift, how you work with Swift. There is a lot of fraud, and remember, fraud happens when there is always either high volume. With high volume, there is also a lot of manual work going behind the scene, and then also there is a lot of unstructured data which is flowing from banks to bank, right? Banks are trying to reduce that at all levels, right? And what they're trying to do is reduce unstructured communication between the banks to avoid any slippage of fraud. Because once you have a match, you have a match, right? If I transfer money from here to say India, and I transfer this to a different app, what I've seen now is that a app sitting here in the UK, they know exactly the IFSC code, they know the UPI codes, they know, and I can just do it in like the way I do it in India, right? I can just transfer money from here. And in old days, I know it used to take like days before money used to kind of transfer from here. So there's a lot of technology which is going behind the scene, helping track transaction, look at money laundering, look at fraud elements. We still see frauds happening across the globe, right? But there's a lot of investment which goes behind the bank's technology to restrict, and there's a lot of encryption now coming up in the market. There's ISO standards which are kind of implemented in payments, in trade transactions, right? And what I said earlier is, as money laundering, is part of how trade happens, right? So sometimes trade becomes a very very fertile ground for anyone to really do frauds, underbilling, overbilling. There's so many commodities are priced. All that happened because there's no data where you can kind of go and see how transactions are happening across the globe. But what I've seen now, like companies like TradeStream, right, what they've built is like amazing, right? If you do transaction through the platform, and over a period of time, you can actually see how suppliers are working with you, how buyers are working with you. You can see a lot of data in terms of who's a good supplier, who's a good buyer, right? In fact, for factoring organization, that becomes like a fertile ground to see a track record of transactions, and then easily fund people who are kind of doing a great business between different countries, right? So all these technologies, what are they going to do is basically bring all this data together into one platform, or few platforms, and it will be easier to track fraud, right? And it's much easier than what used to be like 5 years back. It's much easier now in trade business to kind of look at the trends and see, hey, there is a potential fraud here, there's a potential fraud payment here, right? And banks can do that much faster now. But there's a lot of spend which is going behind technology improvements when it comes to transaction banking, and how bank kind of look at frauds, right? So but it happens, there's a percentage of a transaction which goes through this, but it kind of have evolved, and machine learning is making it easier to kind of track or trigger transactions much faster than they used to be in the past. You're on mute, Gauri.
Ravi, would you like to add something here? Thanks, Satish.
No, definitely. There is a study which I read recently that for every dollar spent on securing transaction, equal amount goes for bypassing those things. And not just transactions; it's across. For everything, there is something or the other goes on. So, why does a fraud happen? Now, obviously, there are two elements, or there are stakeholders involved, and as we spoke earlier, also that there is an involvement of a customer, bank, buyer, seller, or whoever is involved in the transaction. So it's extremely important if you are plugging in if banks or financial institutions are plugging in the loopholes, it's equally important on the customers and or the counterparties and to plug that loophole also. So even if one element is missing, there is definitely going to be an open area, open gate which you are leaving around. I can share one example even where the customers were sharing some instructions to the buyer directly for payments to be made in a particular fashion. They were getting hijacked in some fashion in between, and the payment instructions were getting changed. This has happened in the past also. So how does it happen? Obviously, what we are talking about is the customers possibly being not sensitive enough to use that mechanism, the protocols, the standard protocols for sharing information, which is to use the encrypted mechanisms, using the high-end solutions, not transacting on emails, not transacting on WhatsApps or whatever be it. These are the important elements where the customer's involvement is also extremely crucial. So unless all those loops are closed, there will be somebody or the other, trying to, and there are hundreds and thousands of people who are sitting for this sort of an opportunity. So banks definitely are doing it. All financial institutions, it's their bread and butter. Obviously, they have to secure the transaction because the risk is too high to bear. More than that, it's a more of a systemic risk which cannot be allowed to be unseen at this point of time. So the evolution is continuously going to be there. As much as you build in the mitigants, there are going to be somebody who's going to be one up. But it is important to the customers and all this people who are involved in the transaction to be extremely cautious. And it's a lapse, I would say, at anyone's end. Technology brings in to a level. The next is, when you bypass that, like a red flag is issued, somebody bypassing that red flag is a cause of concern, because they may have a pattern that they would have seen a pattern earlier, but this time the pattern can be a different element, right? So that is something, keeping your eyes and ears on the ground completely gives you a good many indications, which apart from the technological inputs, can help prevent and mitigation problems. To an extent, I would say AI and ML can pitch in to an extent. I would say it cannot never be 100%. The human element is something different. That is a sixth sense which brings into play. But of course, when you're talking about hundreds and thousands of transactions, volumes, that becomes difficult. And when that hundreds and thousands gets eliminated to a possibly few hundreds, that's where the human element comes in, and that's where extremely important that to prevent against the fraud mitigations. So that's my insights on this. Thanks.
Thanks, Ravi. And very interesting that for every dollar spent on improving technology, there is someone who is also spending same amount of money to mitigate it or to bypass whatever systems are there. So yes, this tussle will always be there, but because of this risk, we cannot stop the advancement. So like you and Satish rightly said, the predictive analysis, the AI, ML, blockchain, everything coming together, and the centralized database would definitely help mitigate this risk. Thanks, Vinod, for joining and asking this question. And Arjun has another question for both of you. Could you please share your views on how latest development in Gift City catering to global aspirations of India in factoring? Let's start with Ravi, because this is more about factoring and internal environment.
No, so what is a gift city is something similar to, for people who know already, it's something similar to a DIFC in Dubai, or similar such scenarios, offshore city within a onshore, yeah, right? So it's making it more international on the financials, on the financial services front. Definitely a positive, a huge positive for the Indian exporters. So what happens is, typically, I'll give you an example. Again, I like to use examples. That's what makes connect easier. A customer in India sells, not many, say, consumer durables or even consumer goods, or usables or food stuff and all those things, across the world. For ease, many of them, transit through Dubai DIFC today. Okay. Uh, because that's where the DIFC functionality comes in, to ease, to bring in the cost, or lower down the cost and other elements, and all those perspectives. Now that's where the government's endeavor is to use the gift city as a conduit, or as a mechanism where international financing or international means are available to make that pain less towards to that extent. So that's where the intention is there, and implementation is also equally important. We are seeing the positive trends as of today. In fact, yesterday I was speaking to some official from Gift City. They're extremely positive. It's an extremely positive development, and more banks, financial institutions, and all the stakeholders are looking at it in a positive manner. It brings down costs. It brings in efficiencies to a greater extent, which may not be possible in a manner on an onshore transactions or onshore services. That's where it is there. Keeping all these risks within control is equally important, and that's what the Gift City is also doing it. While enabling, I would say it's more of an enabling culture which is being propagated in India through this Gift City, which will enable financial lot many ease in the financial services, both inwards and outwards. So I see it as an extremely positive development, and especially for factors like us also.
Thanks, Ravi. Satish, your views?
So my view is very, not very detailed on this topic, but I understand because I've seen this across different economies where trade is the main way they work and the economy works. So Dubai, Singapore, right, Hong Kong, these corridors or these areas kind of help basically flourish trade. India has been missing this for some time, right? Of course, we have some part of it in a terminal, right? So there are terminals, there are bonded terminals. You can do stuff there, right? And you can just ship products out from the terminals. But having a financial system working around this will be a very, very good thing. I think educating more about this will be very important for usage and bringing this into more to more corporates and banks and factoring companies. Yeah.
Thanks, Satish. So, yes, Arjun, thanks for asking this. And the Gift City is a gift for factoring in India, indeed. And we look forward to factoring in a much more bigger way with this particular provision. So, back to you, Satish. How can Hexaware Technologies help customers in bringing in the technology and element and having that secure technology as well?
Sure, sure. So, Gauri, in terms of, as you rightly said in the start, right, Hexaware is about, cloudify everything, automate everything, and transform customer experience, right? If you see trade, I think that's what what is required in trade. We see a lot of banks and corporates still have, on-premise, infrastructure to, do their businesses. We are helping corporates and banks to kind of, move to cloud and help them kind of leverage the ecosystem in cloud, which is a much vast universe than what you have on-prem, right? And that means you can connect to different technologies through API. You can connect to different enabling technologies to make your processes better, right? So at a cloud level, at an infra level, we're helping customers kind of leverage their on-prem better or move them to cloud in most of the cases. On the application side, we are kind of working with organizations like Bolero, Finestra, TradeStream as a niche, technology provider in trade finance, right? And these organizations are just transforming the way trade has been done, right, over the years. So everyone is kind of working on digitization. Everyone is using cognitive technology. So we are very much involved in implementing those technologies, right, for our customers. So from identifying the right technology for the right size of organizations, from assessing the processes, right, how your processes are done, the risk in your processes, the manual effort in your processes, the spend on your processes. We kind of study all of that for our customers, and based on our study, based on our assessment, based on the right technology fit into that particular customer, we basically then kind of recommend what will work best, right? So we also don't like to overkill when you can actually do a solution with a small a robotics automation versus you can use a low code, no code, and not really burning the ocean by making stuff difficult. Like for an example, branch operations, right? So branch operations, as we all understand, right, people kind of bring documents to the branch. The person in the branch just kind of look at the the covering sheet and look at the number of documents, and that's it, right? And if you can automate that, a lot of downstream can become easier, right? So we are working on that with the low code, no code technology through like Acceptor, right? We have built solutions which you can deploy in branch. So that means you're doing front office transformation and helping your back office transformation better, right? Then of course, on the business side of the world, we are looking at running operations for our customers. So, for an example, if there are global banks running, like 200 people worth of trade operations, right? And what we have done is, we can run the same operation now with the help of technology with only less than 60, 70 people, right? And instead of 200 people, a lot of manual work, a lot of manual errors, and whatnot, right? And we use this technology to do two three things, right? One is reduce the risk exposure. Second is reduce the turnaround time, because as Ravi rightly said in the start, it used to take like 5 days in the past. Right now it's about, hey, I have made the payment, I have submitted the document, when will my payment come, right? And if you take like 5 days to get the payment, it's not done today, right? So if we help them do payments faster, process document faster, so turnaround time is faster, reduce the risk of fraud, money laundering, so keeping you safe from any risk associated with regulatory risk. And of course, giving the cost of ownership, right? So your reduced cost of ownership is very, very important. Imagine a trade finance expert sitting across the world, doing trade in 2 hours or 4 hours or 5 years. The spend on that particular transaction is so high, so we help them reduce the total cost of ownership by 40%, sometimes 50%, right?
Yeah, thanks, Satish. So, for our audience, it's not that they just cloudify things and automate things. They bring in smiles on faces of customers, and they do it with good people as well. So, there's both combination of technology and the human element, as Satish mentioned. Satish, there's a question from Gopi Krishna, and he wants to know, with all the information and work in new age tech like blockchain and all of Web3, do you see reduction in cross border transaction charges and any major change in the way we are doing international trade now?
Oh,
So, what do you
absolutely.
see?
Absolutely, absolutely. We will see a lot of change which is happening, as we were giving examples of how payments used to work earlier. Trade is going to be, more like, so imagine how you do today, Amazon, right? How do you shop on Amazon, right? How do you transact between Flipkart, right? In India. I think that's how the trade will happen. Of course, the transaction size is just much bigger, but that's what everyone expect. Blockchain and these new promising technology will bring to table. Faster processing, faster payments, faster documentation, and of course, it's going to reduce the charge of transaction, because this is all technology. Remember, when you have thousands of people working behind the scene, legacy technology maintenance behind the scene, that means the cost of transaction is higher. When you reduce all of that and bring it to cloud, do it through blockchain, more variabilized manner, the cost is bound to decrease, right? And efficiency is going to increase, your turnaround time is going to be much better, right? So you will see that change. You will see that obtaining finance will be much faster than in the previous last few years now, because there will be a clear track record, right, of transactions which are happening. There will Once you do blockchain, you'll be clearly visible in the market, how you operate, right? How your payments, your credit notes, everything will be visible, right? And that will make transactions and factoring much easier. In fact, as Ravi was talking about, and Gauri, you also mentioned that it takes like a lot of effort to kind of obtain finance, and people are now going to factoring, but it was always traditional banking, right? But technology is going to make sure that it's no more the banks who kind of controls the trade, but it's going to be more parties getting involved, right? In fact, I've seen there are platforms where individual investors can actually, a qualified investor can actually invest in a trade finance, right, through a platform. So that means there are new parties coming in. There will be a lot of margin fight, but remember, the cost of doing this business is also going to decrease, right? So that is going to change how world operates. So and we have seen this happening in payments in Europe. If you see PSD2 mandate, which has kind of asked banks to kind of open up their database to trusted partners, and there is a blast of fintechs coming into the market who are kind of doing buy now pay later, and so technologies, right? So there is a new set which is kind of just emerged out of this new regulation. Again, technology kind of enables that, and now participants can do more value with money, and you see a lot of participants coming in that market. And similar is the case with trade. I am seeing a lot of participants coming in from different industries and participating. Yeah, so it's going to definitely reduce costs. It's going to increase the efficiency of the market, and it will build trust, right? The trust is very important in trade. Yeah, it's going to help build trust.
Thanks, Satish. Ravi, your views?
Yeah, definitely. Now, obviously, one was the time element which I shared earlier. And obviously, the cost element, we know the international transaction passes through possibly at least two banks when the transaction is being, the payment is being made, or maybe three to bank actually. One is the buyer's bank making a payment, one is the intermediate bank or the downstream bank, or what we are talking about, who do the nostro transactions, and so they will do the clearing bank, I would say. The third one is possibly the receiving bank, and possibly there might be an element, if not, maybe a third or a fourth bank who might be there actually utilizing the money. So there is an element of, and each transaction, we know that from a Swift point of view, it's not straight through. It is straight through, but and in realizing, reconciling within the banks, the system with all these banks put together, ultimately the buyer sending the payment on a Monday, the customer ends up receiving at least on Wednesday or so. So there is a lag on the international transaction, which is definitely a pain area. Apart from that, I think there is a cost, also, which each of these banks possibly might be levying, because they are running through the transaction through their systems. There might be a fee which each of these banks would be levying to the customer. So that reduces $100 possibly to $19, at the end of it. I'm just giving you a very rough example, but there is definitely a cost element which it involves. So we have seen the emergence of the neobanks and the digital banks which we are seeing today, which are bringing in the technology, as Satish mentioned, the technology elements. So to bypass or to reduce these elements of lag, where between the buyer and the seller, to ultimately make win-win situation for all the stakeholders, including including the end users, who may actually end up utilizing or reducing the cost to a greater extent. So definitely, we should see the reduction of the cost with the new technologies being implemented sooner than later. The customer is going to be benefited.
Thanks, Ravi. So I'm relating it to what happened with retail. I think the speed increased, the cost decreased, and power got decentralized, and customer was the winner ultimately. So same thing is going to happen in international trade as well. Thank you, Gopi, for joining and asking this question. So yes, exciting times ahead for international trade now. This is going extremely interesting, but we have already overshot the time. Satish has just started his day, and we can't hold him long. And Ravi is celebrating all the festivals, so he has to go back home as well. We'll have to close it here. Thank you so much, Satish and Ravi, for joining. It was really insightful, and looking at the questions that have come in, I'm sure our audience have also enjoyed it. Thank you so much, Satish and Ravi.
Thank
Thank
you.
you,
Thank
Gauri,
you.
for having me on
Pleasure
the
to be
show.
there. Thanks.
Thank you. So here was Satish and Ravi talking about technology, everything technology, and trade finance solutions, working capital solutions. I hope this was extremely useful for you. And we are going to come back with another interesting session on 4th Thursday, 12 p.m. Second and fourth Thursday every month, we come up with a chat show, factoring one-stop solution for our global aspirations. Some of our audience, we could not respond to their questions. We will be writing to them separately, and we will be definitely resolving your questions. Thank you so much. If you want to know more about India Factoring, don't forget to visit our page, LinkedIn page, our website, our Twitter page. We are reachable everywhere. Thank you so much, everyone, for joining. Signing off. Thank you. Have a great day ahead.